podcast is provided for informational purposes only and should not be relied upon as legal, business, investment, or tax advice. All opinions expressed by podcast participants are solely their own opinions and do not necessarily reflect the opinions of RCM Alternatives, their affiliates, or companies featured. Due to industry regulations, participants on this podcast are instructed not to make specific trade recommendations nor reference past or potential profits, and listeners are reminded that managed futures, commodity trading, and other alternative investments are complex and carry a risk of substantial losses. As such, they are not suitable for all investors.
Welcome to the Hedged Edge by RCM Ag Services, where we're getting out of the field and onto the mic to bring you weekly market updates, commentary from commodity experts, and monthly interviews with the biggest names in agribusiness.
Welcome to the latest edition of the Hedged Edge. I'm your host, Jeff Eisenberg. Today, I'm joined by several of my RCM Ag Services colleagues from around the country to catch up on a post-harvest update, as well as share an outlook for production, marketing, in each of their different respective regions, plus the remainder of the remaining 2021 marketing season and the upcoming 22 crop. Well, let's get the introductions out of the way first. First, it's always a pleasure to have Jody Lawrence back on the show from our Nashville office. Hey, Jody.
Hey, Jeff.
Yeah,
Merry
good.
Christmas.
Well,
happy holidays, everybody.
That's right. Jody, you earn the most frequent flyer miles of anybody I know. You're all over the Midwest and Dakotas. I'm looking forward to hearing a little bit about your travels here today. Next up is Jake Moss. Jake, how you doing?
Good, Jeff. How's it going?
Good. Doing good. Jake's in our Western Kansas office. Jake is active on both the risk management side as well as wealth management pieces of the business. Jake is also the head Hoxie Indians basketball coach. So you got your uniform on today?
That's right. We got the jacket on. We're always representing.
All right, go Indians. Let's do it.
That's right.
And finally, joining the show for the first time, well, it's my pleasure to welcome Justin Penrod. Justin, how you doing?
I'm doing well, Jeff. Glad to be here.
Good. No, thanks. Justin and his team have been providing risk management services in Central South Dakota since the early 1980s for their own farms as well as the surrounding community. And I got to say, the picture over your left shoulder is pretty. It kind of hits me. I wish I was out there pheasant hunting with you right now. How is the pheasant hunting?
It's actually prime time. We just had our first snow accumulation last week, and that brought a lot of the birds into the trees. They've been spread out over the fields, so they all kind of got centrally located now. And there was a few guys out massacring them. I have not yet to partake, but hope to soon.
Well, I can tell you that Jody and I certainly hope to be back at Brown's Hunting Lodge sometime in the near future. That's best place in the state. So look forward to that.
A lot more entertaining this time of year than July or August, whenever the last time was you were there.
Yeah. Well, we'll put it on the docket. So, all right. Well, let's jump into markets, guys. Again, appreciate you taking the time. I think at this time of year, it's always good just to do a short recap of this last harvest. Pretty much everyone's wrapped up. And we had a wild year. We had a year where we're hitting close to all-time highs in terms of yields and production. But that wasn't the case everywhere. I mean, might as well rip the Band-Aid off, Justin, and start with you. I mean, the Dakotas, they got smacked. What can you tell us about the region without, making it too much of a sob story?
It's not, it just is what it is. It's our third major drought in the last 6 years, so it's nothing new to any of us. We had about 4 inches of rain from the 1st of January to the 15th of August, and then to turn the party on, then we got about 8 inches of rain from the 15th of August to I think about the 20th, about Halloween. And so we got twice as much moisture from August till October than we did all year. And so it just made finishing the harvest, what we did try to get, just a miserable consequence of moisture. And I mean, luckily it built our profile up, and we're actually been kind of dry lately. I mean, it all went in the ground, so we have no water holes or nothing. So it's everybody's optimistic for next year. Moisture, having some moisture to start. I mean, everything should come up. The winter wheat, I would say our winter wheat conditions and our rye looks as good as it can. Really had a good start. We got it in. Bean harvest was really early, and there was a lot of silage cut. I planted everywhere I cut silage, I planted winter rye. Got a new crop offer at $8. They'll take all I can give them. I'm holding out, hoping that wheat goes to 15 and the rye will come along. But rye is kind of its own special commodity, mostly used for cover crop and whatever. So it could be, I mean, it was $8 last year when wheat wasn't quite to 8. So
interesting time to be thinking about next year's crop is the moisture hitting the ground this time of year is super important, and we'll jump into that in a minute, what we're thinking about on the outlook side. But overall, your guys, they harvested and they'd been selling along the way, and they ended up really, from what I understand, stuffing what they did harvest back into the bins. Is that about right?
Yeah, all the bins were empty coming into harvest, and it was a short crop. So probably 75% of my customers would be considered hoarders. They hoard grain. They are the eternal bull. I mean, which, you about have to be out here bullish all the time. Otherwise, it would make absolutely no sense to proceed. But no, the bins are stuffed and locked. They're not, I guess stuffed is the wrong word. Whatever we had, we put in the bin, and we're going to hold out for a basis move again, like we had last year. Whether it'll happen or not, back to back, all bets are off. I never figured we'd be sitting around. I didn't think December corn was going to go off at 5.90. So can the basis go $1 over? I'm not going to tell anybody that it can't. So
got it. Okay, well, that's good. No, thanks for that recap. Moving on to Kansas, Jake, you guys have perpetual water in your wells, at least in your small town. How'd the region really fare?
For the most part, anybody that had dry land, it was kind of just like it was around the rest of the world. It was, real spotty in our county. You may be 20 miles away and have something that looks really good, and go down the road and it's not really good. But I think everybody was, relatively pleased with how everything turned out when they did get into the field. We have a lot of competition in our area for grain. So, that's a good thing for our farmers to have. But just kind of like, what Justin said, a lot of people, if they have storage, bags is becoming very popular in our area. And so people are starting to utilize those. And, a lot of people have, either picked the location they want to deliver to, and most people have left their bases open. They have not locked that in, but, I think they locked some prices in earlier in the year. So that's been a good thing for us. Kind of opposite, I guess, of what Justin had is, we got rain throughout the season, but, we've recently turned dry, here from about August on. And that's kind of been tough on our wheat, but really we've had warm temperatures throughout the month of December. December 4th, we set record highs of 80 degrees, all-time highs. So it's kind of been unusual weather. We haven't got the cold, we haven't got the snow or anything like that yet that we usually do. Got it.
Well, we'll hoping for the best, and I think we could all use a little bit of moisture. Even where I'm at in Ohio, it's been pretty dry. We've had some rain, but no snow. And, it's 55 degrees today. So kind of crazy. But speaking of Midwest, Jody, really the Midwest seemed to make up for losses and problems everywhere else around the country. Would you, what was your overall impression and feedback from your customers?
Well, I had several meetings in Nebraska over the last couple of weeks, and then went to Wisconsin and talked to everybody in between. Had a brief stint in Iowa, and it comes down to the start of the summer growing season that kept the Dakotas dry, broke just enough in Nebraska that areas last year that were really hit hard when you go south of the South Dakota Nebraska border, say from Yankton down to Lincoln, they bounced back this year with record crops, and some of it was done on like Jake said, there was some just-in-time rain that really helped them, but overall just a huge crop that the Western Corn Belt really evened out a lot of last year's problems. And what the interesting thing, and part of the reason why corn, like Justin said, is going off at $5.90, and most basis bids have it over $6, especially at the ethanol plants, is that the Eastern Corn Belt looked like it was going to be a record by a significant margin, but the late heat, you had tar spot, you had a lot of things go on with the crop. In Illinois, crop that looked ideal 2 weeks before they got into it, or before it went to black layer, and then the yields in those fields, while they were still spectacular, they were 20 to 40 bushels below what that farmer had expected, and they'd farmed that ground for 50 years. So everything just kind of evened out this year. But I think the biggest story is not about the weather or the yields, because we're getting to a point where genetics, with enough rain and the good stewards of the land that farmers are doing and squeezing everything out of it, is why is basis at the highest we've seen it since the end of 2012. We know what happened in 2012, but we just came out of two, if not record by the time we get the January report, certainly, top two crops, that you have the best basis we've seen since 125 bushel yield in 2012. So I think the big mystery moving forward is, what did we miss? And really the only thing, because they really can only come down to two things, because the export demand, we know what happens there. Everybody has to report it. Nobody is sneaking it across the border in their pickup truck, and all of a sudden we lost, 50 million bushels worth of corn. It comes down to the fact that, as I think a contributing factor, but not the bigger of the two, is that you've built so much more on-farm storage since 2012 over the last 10 years that farmers are really able to do a much better job than a decade ago, especially 15, 20 years ago, of controlling their local basis, of being able to store it until they get into a position where they need to balance their books for year-end taxes, or just hold it all till January 2nd. And the biggest thing this year that's certainly a contributor is all this corn, all these great yields that were grown this year were grown on input costs, at least 50% lower than for what will happen in 22, because you look at where prepay season started and what they were paying. We were just at the edge of the world logistics crisis that we're certainly in the middle of now. But you had most farmers selling $5.50 plus corn and $12 to $13 beans all through harvest, and they planted them when corn was at below $4 and beans were closer to 10. So the margin on this year's profit margin for every farmer on this year's crop, probably the best it's been ever, simply because in 2012, even though the prices were high, they lost all the bushels to make things meet in the middle. In 2013, you already had all the input costs well on their way higher, much like we're going to see for 2022 costs. So
Yeah, that's good. I think you're hitting a lot of really important points that we should really kind of backtrack on. And you've mentioned ethanol, the ethanol demand. You mentioned the fertilizer prices, and then obviously where we're going. And I'd love to hear the regional basis from Justin and Jake and yourself. You mentioned $6. Well, Justin kind of talked to him and I talking earlier today. You said 6 is kind of the mark. Is that the level in which these ethanol plants are profitable and they're holding up the market? I mean, what are your guys' thoughts?
Yeah, the ethanol margin is $1 a gallon, or has hovered on either side of it. It got up to almost $1.30 at one point at the highs, and never really has dipped below about 75 cents. And even though we went through all the RIN and the biofuel and the EPA and all that foolishness with the administration about not giving out numbers, the numbers really become a little bit immaterial, because as we use it, as driven miles bounce back, as we export it with more countries using it, if you have an opportunity to make a product and sell it at your very highest margins that you've had probably in the history of the industry right now, there's no reason for ethanol, corn used for ethanol, to slow down, or for the ethanol plants to go, oh no, I'm fine, I've made enough money, I'm going to take 6 months off and hope I go back to where I'm just barely breaking even.
Justin, your biggest buyers around you, the ethanol plants?
Yeah, they're the bid. Like I was telling you earlier, plant 100 miles away, they didn't move it today. Their closing price is 605, 15 over, and 40 miles away it was 17, so they were at 607. Previously, last week when we were up in this area in the corn, they'd weakened up a little bit to like I said, it just seemed perfectly obvious they weren't really wanting to pay over $6 cash, but they did give in and leave it today.
Well, and last year they were shutting down and it was like 65 under, right? It was complete opposite story. The same time last year, right?
Yeah, they didn't want it. I mean, it was they had plenty, and it was a lot of wet corn, and they had all they wanted. So yeah, the basis really started to improve around March, and then just went parabolic. And I mean, I think traded $1 over around first notice day of July, I believe it was. But they're hungry. I mean, they're worried about corn, and like we talked, as you get closer to I-29, their basis at Watertown, South Dakota, is 12 under. So it's 100 miles from 110 maybe from Mina to Watertown, and there's a 27-cent basis.
Wow.
Difference.
Just kind of speaks to the region and you guys missed the rain and they got it, right? So Jake, you have an ethanol plant nearby, but your main buyers are the feed yards all the way down to Garden City. What is the basis looking like for you? And has it been a similar story, but one driven by the feed yards, or what can you share?
It is. So kind of around where we're at right now, things I've been hearing is everybody's about 50 over, and you can get some
50. Nice.
What's that?
50.
Yeah, 50. Yep, over. And usually we're running at a discount. So kind of similar story that everybody else has shared. The ethanol plants, right now are making more money than they have for several years, but if you go further south into the Garden City area, that's where you find the 90 to $1 over bids. But if you call them, I think you can get a lot of stuff picked up for about 35, 40 now. So it's been fairly strong, throughout the winter. There was a time where people were a little uncertain because they didn't know what fuel prices would do. So the trucking and the transportation of all that kind of slowed it down. But I would say ever since we've got into the November and December months, it's definitely picked back up.
Now, we talked earlier today, Jake, you mentioned some rotation decisions might be coming into consideration, perhaps due to these, these types of scenarios, basis scenarios. What are you seeing? Obviously, you guys have water, but guys are thinking about making changes, more beans?
Correct. Yeah. So right now we, most of our guys stick to a rotation, corn, beans, and wheat. But, the prices of anhydrous right now, I think last spring they were about $400 a ton. And then most recently they were quoted here about $1,300 a ton. So I've had several of my customers say, they plan on switching to beans, for a few acres, which is kind of uncommon out here. Everybody, I think, is kind of nervous about what these prices may do. Now, we did get the kiss of death yesterday. CNBC talked about fertilizer prices, so maybe we topped out. I don't know, but
that's definitely the kiss of death. Doesn't matter to the market. If it makes the CNBC, it's that guarantee going the other way.
Right. So, but I think a lot of my customers are concerned. They think the price of corn will stay there just because of those prices. But everybody's kind of at a wait and see basis right now.
Got it. And I mean, Jody, you've been doing this 30 years. What really realistically, how much rotation change do you expect people to make?
In the conversations I've had with everybody, similar to what Jake, there will be some isolated, but it's not going to be a wholesale change simply because the dollars committed to the rotation are not just going to be, thrown to the side simply because the cost of, and this is from one of the locations where I was, the cost to plant and fully fertilize an irrigated acre of corn in a couple of eastern Nebraska counties is over $1,100 an acre. But they're fully expecting that that's going to be $250, $260 corn. And right now they can make money, that $200 an acre. I think one of the things you're going to have to look for, even though a majority of all the farmers are flush with cash right now because everything just worked out in their favor for 21, you are going to have some banks making some lending decisions and some acreage switch decisions for some farmers who might not be in perfect shape because they'd much rather loan them $500 an acre on a crop that could still, make them $150 to $200 an acre rather than loaning them $1,100 an acre and just assume that bigger risk.
Right. It's a really good point, and bring the banks into it because at the end of the day, for most, they still have to go to the bank to make those purchases or borrow the money. Are the banks behind these new prices? Is a really valid question. I guess we'll find out. The acreage decision here, or the acres. So, we've seen some reports, maybe 97.5 million acres potentially. Do you feel like those numbers are even possible? And if so, what do we have to do from a marketing perspective to, one, make sure that if we are going to spend this much money on fertilizer, that we're protecting this crop, and two, even if these large crops do come in, again, make sure that we hit our break evens, let alone, make some money. To me, what are your guys' thoughts in terms of a shift in mindset to managing these risks, the outside risks versus simply the price on the board? Justin, you want to go first? Have a first crack at it?
Well, with so much being in limbo, I just started last week after watching market to market, and Mark Gold happened to be on, and he built a case around, we raised a record crop this year with less than ideal and weather conditions. And if weather becomes, really good, maybe corn struggled. I mean, we've watched it fight $6 for a month. So I just did my first collar last week, did $5 puts and sold 620 calls. for December 22. And I mean, I hope it was a cocky move, and I'm a buck in the money on the 620 call, but I can't wake up and have 450 corn.
There you go. I think that's the main point, is that this new regime of volatility and roller coaster ride that Jody, we talked before we started, needs to be protected. We need to be protecting ourselves and protecting the customers. So I think you're spot on there, Justin. I know Jody has some thoughts on it as well in terms of utilizing cash and then re-ownership strategies through options. So I don't know, Jody, do you have any other comments?
Well, the first thing is on the acreage, everyone I've spoken to in the industry, and this is just simply a fertilizer perspective, this is not an acreage perspective, that we get to the point where the logistics of the market simply are not going to allow 98 million acres to be planted. First of all, we don't have enough of the product to be spread around for that much cover. And somebody made an interesting point. 2013, everybody kind of got away with putting in a cheaper crop because the weather was so bad in 12 that they did not use all of the nitrogen and the other inputs that they put in the ground. And 2012 was a very well fertilized crop because it got in early. And so this year is not going, there isn't going to be that situation. If everybody's going to have to go back to full fertility if they want and expect, the types of yields that they saw this year, if the weather's good. And to me, the first thing is you hold on to old crop corn until you write a check and know that your inputs are going to be delivered to you. And then you can start selling some old crop to pay for them. But at that same time, you have to put on some new crop hedges, because the last thing you want to do is buy 550 inputs and be selling, like Justin said, 450 corn. Because if you want to give back everything you made this year plus some more, that's the perfect recipe to do it. And I agree with Justin. One of these years, everything's going to hit just right. Everything's going to be perfect. And within the next several years, my guess is we're going to easily see a 180 plus national final yield. And it could be hitting 185 if we get that perfect Goldilocks storm of good weather and good planting conditions in the spring.
Yeah, no, that's real good points. And Jake, what are your thoughts? Obviously, you guys have a little bit different conditions out there. What are your thoughts on protection and strategies to manage this risk?
Really, Justin kind of nailed it on the head for what we have been doing. We've looked at a lot of option spreads as well. I know his strikes were maybe a little bit different compared to maybe what time you put those on, but I would say that's a lot of probably what we've been doing. Guys really don't want to give away their upside potential, and that's really the best way we've found to do it is, lock in a floor. $5 seems to be what everybody was wanting the past couple of years. We now have the ability to lock that in and then, give yourself a ceiling up there around, 6 and change, wherever that may be. So that's kind of, where everybody's at. But like Justin said earlier, everybody's kind of a perma bull too, and they want to see, exactly where, these acres and these fertilizer prices are going to go. But by then it might be too late, because the acres, like we talked about earlier today, they don't even come out till March. So a lot of these guys need to be thinking ahead a little bit here.
Well, that's real good perspective. And then also the thing to remind ourselves is that last year, this time, people were, really trying to figure out how they could get some grain sold, because we'd come from $3 up to, maybe we're at $4.15 maybe this time of year. But starting to put on those new contracts for old crop. Well, in this same scenario, I feel applies. I mean, the ethanol plants and the end users are demanding the grain. They're trying to pull it out of the bins. They're paying over on basis. Well, at some point here, let's look to sell that, take advantage of almost $6 corn plus basis. And what we did last year, which was successful, I feel, across most of your customer base was then re-own the board to have some exposure in the event that it does continue to rally. So, I don't know, Jody, you had quite a bit of those trades last year or this year, I guess, for 20 crop that worked pretty well. Did you have any additional comments there? Or
well, the short dated is when I'm doing it, going all the way out to March, buying at least 2.5 months for a late February expiration, and go against the December 22, because I don't think the market fully understands 545 corn is not going to buy futures December 22, and basis is not in 22 nearly as good as it is now. It's much more like normal. So it's, well under in most places, but it's just not going to buy that 93 million acres, 92 and a half, 93 that we need just to break even on the expected demand, assuming there isn't, whatever the variant after Omicron is doesn't shut us all down again. That you get to a point that if we meet in the middle at 90, corn is an extremely bullish position, and beans become the one where you have to be a seller. If I was looking at something, just to make sure, I'd make sure I had a floor under all the beans I'm going to plant, because if we sneak in here and plant 92 million acres of beans, and nothing goes wrong, nothing more goes wrong in South America, there's no reason in the world for beans to remain over $12 at year $12.43 for next year and $12.60 for this year. You very easily could take $1 off of them, if not even go into the high tens, if you get 92 million acres of them planted. So
sounds good.
Yeah. And
sounds right. I think that's right. I mean, being proactive and risk management are key. Jake, Justin, do you guys have any more last comments before we jump off the line?
No, I was just want to know if in Kansas, are they hanging on to their wheat, or are they grazing it, Jake?
Usually we don't start grazing it until we really get into a later part of the year into 2022. But for right now, we actually, we do have a few contracts on the board. Most people do hang on to it. They'll maybe graze it for a while, and then they'll go harvest it. But kind of some closing comments that I leave with guys is, everybody, kind of has hindsight. They always think of 2020 or 2012, which you guys talked about. And I had a guy telling me the other day that he actually turned down an offer for corn that was over $8, and wow, just how stupid it was. And so I think guys need to, kind of remember where we have been for a long time with these $3 prices. There are things you can do to get some stuff locked in on the downside while keeping some upside open, like we mentioned, or just, some different strategies that we all know here and there. But the main thing is, don't have any regrets when it comes to, the end of the year, and make sure that, you do stuff that your farm is profitable. And we always talk about guys hitting home runs, but, Jeff, we were sitting in a bankers meeting one time when they said, let's keep guys hitting, singles and doubles. And that allows us to keep going and to pass it along to the next generation. And so I hope that, guys are taking advantage of this right now.
Thanks for that last close, Jake. That's good. That's really a smart way to go, and we can all hope to be able to do that. Pass it along. So pay it forward. Last question for everybody, and we'll let you guys roll with your afternoon. Odds look like possibly Titans, Chiefs in the AFC Championship game. Justin, you and I are neutral ground, but Jody, Jake, you guys duke it out. Who's going to the show?
If Derrick Henry comes back healed and intact, I'll meet Jake in Kansas City for that game. Well, actually, I guess we'd host it, because if Kansas City makes it, and I'll entertain everybody in Nashville, and we can go honky tonkin' on Broadway, and get the Zeta version of whatever that would be in early February for the Super Bowl. And but I'd love to see that. That would be it'd be a good rematch, and we enjoyed the one a couple of years ago for sure.
I was at the one a couple of years ago. when the Chiefs won the Super Bowl year, I was at the AFC Championship game when it was like -5 degrees. So I hope we get another chance. The Chiefs are kind of rolling at the right time. Their defense was giving up like 40 points a game those first 5 weeks. Now since like week 9, they've given up 11. So seems like a lot of things are clicking. Hopefully they can stay healthy and keep rolling.
That sounds good. Well, we appreciate you guys taking the time today. I wish I was saying the Bears were going to be meeting you guys in the Super Bowl, but that is absolutely not the case. But at any rate, have everybody a great, happy, healthy Christmas. New Year's coming up. People can always find us online via the Hedged Edge podcast. You can reach out to us at agsupport@rcmam.com. And you can also find contact info for Jake, Justin, and Jody on our website, rcmagservices.com. Gentlemen, thank you again for taking the time. Merry Christmas, Happy New Year, and here's to a great crop in 22.
The Hedged Edge is brought to you by CME Group. CME Group is the world's leading and most diverse futures and options exchange. For more information and educational resources about futures and options, visit cmegroup.com.
You've been listening to The Hedged Edge. Links from this episode will be in the episode description of this channel. Follow us on Twitter at ag_RCM, like our Facebook page under RCM Ag Services, and visit our website to read our blog and subscribe to our newsletter at rcmagservices.com. If you like our show, introduce a friend and show them how to subscribe. And be sure to leave comments. We'd love to hear them.